Is Didi stock finally safe? In this video, we're going to talk about why is Didi Global rallying so much. At one point earlier today, it was up over 50%. Now it's around 30%, up in one day. This is the China ride-hailing company. And we're going to talk about sort of the track record here, my own personal call on Didi in the past, and where do I think Didi potentially goes from here? What do I think about what's sort of been going on with Didi stock? If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing, a no-hype, mission-focused channel trying to find you exceptional companies and unrivaled investments. Let's dive right in to understand the track record here. Looking at Didi, Jim Cramer on the eve of the Didi IPO talked about how he would try to get as many shares as you can. I would try to get as many shares as you can. I personally disagreed. I said, you know what? Not a lot of love here. This is just too hard for me. Another cash burning company, and it's unclear that it has the sponsorship of the CCP, arguably the key customer for Didi. And since then, Didi has gotten crushed. I did 2 videos on Didi, and I think I just nailed it. You could check out the prior videos, effectively saying this is just too hard for me. Since then, down 80, 90%. Just been a brutal ride. And so check out those prior videos if you want to see one of my past calls on Didi. So understanding what do they do, where does it potentially go from here? What you see is you have a business here that has 160 billion RMB in revenue from China mobility. They also have international ride hailing and other initiatives. But the reality is the vast majority of their business is China mobility, providing various different ride hailing services in China. And the reason why the stock is ripping so much today is the news that China is set to conclude the Didi cybersecurity probe, lifting the ban on new users. So their app was prevented from getting new users because of a cybersecurity probe where they're saying, yeah, you can currently run based on your existing users. But if you want to get any new users on your app, yeah, you're going to have to prove our cybersecurity, make sure there's no problems here. And I have some thoughts on this cybersecurity, analysis, this probe. But first, it is worthwhile to understand what Wall Street's, the Wall Street takeaway here, because a lot of Chinese stocks, you look at KWEB, KWEB, an ETF of Chinese tech stocks, rallying in sympathy with Didi. And you see, it is a sign that regulators are following through on their pledge to end the crackdown on tech platforms, which will likely continue to improve sentiment on the sector. I sort of agree with this. I think what this is really saying is the worst in terms of the crackdowns is likely over for Chinese tech stocks. And so from here, because I think the leadership in China saw, wow, our economy is really coming under pressure because of all these various different initiatives, particularly their draconian zero, lockdown tolerance with, COVID policies. And so they're saying, yeah, we need to make sure our economy right sizes itself. We can no longer crush some of the superstars of our economy. Let's sort of ease up here. And so I think that is the right conclusion directionally, that the worst is largely behind them from a regulatory perspective. But this whole idea that this was some sort of cybersecurity probe, I think there's a little bit of phony baloney here, because they even called out in May that if it does not delist from the New York Stock Exchange, so if Didi does not delist from the New York Stock Exchange, it will not be able to complete the cybersecurity review and rectification, which would have a material adverse impact on the business's ability to continue operations. Like, what that should jump out at you is like, wait a second. What is being listed on the New York Stock Exchange have anything to do with cybersecurity? Like, it's not like the data, the servers of all the traffic, that's going on in China and their international relations has to be shared with U.S. investors, or the server data is being ported over. That's not the case at all. Here it is, you're saying this is the information, these are our profits, these are our losses, and we're going to show you and we'll report it. But by no means is this sort of a cybersecurity breach because it's listed on the New York Stock Exchange. This is part of a bigger sort of issue that the CCP has called out, saying, hey, we just don't want you to be listed on the New York Stock Exchange. We want the center of capitalism to move from the East Coast of the United States, New York, the capital of capitalism, to let's move it to somewhere in China. Let's move it to Shanghai. Let's move it, closer to China. Move it to Hong Kong. Let's figure out how that way we can maybe list this, on an exchange closer to us where we have greater control. And so that's really the power play I believe that's going on here, because tying a delisting from the New York Stock Exchange to a cybersecurity review just doesn't smell 100% right to me. And they'd even called this out, effectively around the same time that they IPO'd, where Chinese regulators suggested Didi delay its US IPO because they didn't want them listing on the US exchange. They'll come up with it's cybersecurity, that's the reason why. But it doesn't make sense to me. Okay, so where does Didi go from here? What does a delisting mean? So it'll mean that it'll trade with a lot less liquidity, because you have the New York Stock Exchange, which has a lot of liquidity, a lot of buyers and sellers, to over the counter. That's what I expect is going to happen. So it'll be a lot chunkier. You're going to see that probably in the coming weeks, where ultimately what you're looking at with Didi Stock is that it'll be a lot less liquid. Sometimes what you have when a company delists is that they change their ticker name as well. So maybe it goes from Didi to Dodo. You see something like that happen. I'm not sure if that's going to happen here with Didi. But that's the type of action that happens. And generally it hurts shareholders when you have less liquidity. That said, it doesn't fundamentally change the business, I'd argue. It's just being on the New York Stock Exchange. It's sort of a badge of honor, and that's being stripped away from them, in all honesty, with this delisting, encouraged by the Chinese Communist Party. So the question is, what's the fair value of Didi, or where do I think Didi goes from here? Is this too hard, or is this just a layup from here? First, a quick plug where if you're looking to take charge of your investment journey, consider unrivaledinvesting.com, where you'll get actionable insights on unrivaled companies. We also have a community of fellow investors that you can learn and share with. I also share my own personal journey for those interested in following along. A big thank you to all the Unrivaled Investing subscribers that keep this channel going. So thank you very much. And so if you enjoy this video, please make a point of hitting that thumbs up, hit that subscribe button. So looking at Didi, the reality, this is still a major cash burning company in this economic environment. If I were to own a Chinese stock, and I do own a couple of Chinese stocks, I want to own Chinese stocks that have, let's say, party approval, from the Communist Party, which is arguably their sort of senior customer that tells them, hey, green light, red light in terms of how to run your business. And clearly they got the red light from the CCP saying, hey, you're not doing this right. And so if I'm going to own a Chinese stock, I want to see not only strong growth, I want to see approval from the CCP, and I also want to see profitability and heading in the right direction. And looking at what Didi has right now, they are nowhere near that. It's still very mafugly, financial operations, looking at this. So this is just too hard for me. Looking at that cash flow, looking at that current setup, like the sirens are going off saying this is just too hard for me. And then another key aspect is, making a little bit of an 80s joke, but does this have the Bonnie Tyler turnaround potential? And, yes, the stock is down so significantly. Is it possible that shareholders can just have a tremendous rally from here? And that's tougher for me. Is it possible? I personally, I can't bet on that. I would rather wait to see them start delivering and having favorable execution before I pull the trigger. I want to see that positive free cash flow, positive operating profit, or at least break even before I'd get comfortable saying, hey, now's the time to buy, at least in this current risk-off type of environment, especially when you're looking at, let's say, international assets that might have even more risks, particularly towards foreign shareholders. So layering in these different risks, it just becomes too hard for me. Does it have immense potential if they turn things around? Yeah, why not? But there are so many investments out there. I would rather find either like a deep value company, a company trading well below book value, a company trading below liquidation value, a company trading at a low multiple to free cash flow. I would look at cheap stocks right now and consider that part of my own personal investment journey. And I call out some of those at unrivaledinvesting.com and share my thesis and why I like it or why it's compelling. But for this, looking at Didi, it's just too hard looking at this right now for me personally. Maybe in the years ahead, I could turn around on it. But right now, just too tough. If you have a different view on Didi, would absolutely love to hear it. And thanks so much for tuning in.